Hey everyone, welcome back to the channel with me, Fawad Razaqzada, StoneX Market Analyst. Today we're looking at the price of gold once again ahead of the US Nonfarm Payrolls report, which is due on Wednesday. And that could set the tone for the rest of the week, both for the US dollar and in turn for gold prices. Right now, the FX markets simply do not like the US dollar very much. The main reason is that there's growing risk about the US labor market. Recent data continues to suggest that the world's largest economy is struggling to create jobs. At the same time, global risk appetite remains strong. Equity markets have roared back in recent days, and that's reducing demand for defensive assets like the US dollar. When risk is on and the dollar usually struggles, right? And that's exactly what we are seeing once again. This week's focus is firmly on US Nonfarm Payrolls report. Expectations are already running low after a string of weaker than expected labor market releases last week. So any downside surprises could put even more pressure on the US dollar and bond yields while providing support for gold prices. We saw that theme again today with the release of used retail sales. Both headline and core numbers missed expectations, printing zero on both fronts. That did absolutely nothing to help the US dollar, and it reinforces the idea that the US growth is cooling. Markets are now fully convinced that around 2 Fed rate cuts are coming this year. That keeps the broader bias tilted towards a softer US dollar, and in that environment, gold remains supported. Gold has staged a strong recovery after last week's risk rally. The metal managed to form a higher low around the 4,655 level. And importantly, it's now trading back above the key 5,000 mark. From a technical point of view, that's a positive development. The next area to watch is between 5,070 and 5,100. This zone previously acted as support before the breakdown, and it's now acting as resistance. If gold can break and hold above that area, it opens the door for a move towards 5,290 and potentially even 5,390. Those levels are both major previous breakdown areas. On the downside, 4,970 to 5,000 region is now key support to watch. If price slips back below that area, we could see sellers step back in. That would bring 4,900 into focus again, followed by 4,800 if the downside momentum builds. So in summary then, gold's current trend feels more like a trading market than a clean trend. But the short-term bias has shifted slightly back to the upside and will remain that way so long as support around that 5,000 level holds. If you found this video useful, make sure to like it and subscribe to the channel. I'll see you in the next one. Take care.